Who should not become a VC?
We get like 3-4 cold mails a day saying I want to join VC.
That requires a kind of a skill where you have to be patient, but also impatient at the same time at the right time.
Pure hustle quotient, I think, needs to be extremely high.
It's not a player role, it's a coach role.
As a VC, we are enablers. You are expected to be on the sideline when they don't need help.
Why isn't India able to produce something like YC?
It'll take a long time to build a brand like that. You cannot pour $1 billion to actually fast track that process.
Adit Palicha of Zepto should not apply to YC in the US but to an Indian accelerator.
Adit came to me also back then. He said, I'm in Stanford. If you give me money, I'll quit.
What one thing you would like to change about Indian VC ecosystem?
Most VCs in India still don't honestly close the loop with a founder. There's still a lot of ghosting. Like somebody comes and pours their life's dream out to you and you just don't reply after that. That's just bad.
There has never been as tough time to fundraise.
No, definitely. I think fundraising is always extremely hard.
Hi, this is Siddharth Aluwalia, your host today at Neon Show and managing partner of Neon Fund, where we invest in the best of enterprise software companies built from India for the globe. I have a very interesting conversation today. We are getting together in a single room some of the best emerging managers from India in the VC world. I have today with me Karthik, founder of Peer Capital, Rajan, founder of Upekkha, and Kushal, founder of All In. Welcome, folks, to the Neon Show. And today's conversation, want to keep it fun and make it insightful for the audience also. What goes behind the life of an emerging manager? Like, people see glory that you are writing checks day in, day out, but what is the real grunt work required to make a fund successful and known? So I get a lot of inbound, I think you all would get, right? Now people directly from either IITs or engineering colleges or B schools, they want to come into VC. So in your opinion, who should not become a VC? Kushal, let's start with you.
Sure. So I feel like you're bang on, right? Like many people, we get like 3-4 cold mails a day saying I want to join VC. Will you give me I'll work for free, right? So who should not work for VC? I think if you're too attracted, like if you view this as a glamorous job or something where the socials, like it looks cool that I'm handing out checks to people, right? But if that is what is attracting you to the profession, then it's definitely not for you. Second is, I think you need to have a large, like a long time frame. You need to be very patient because VC, the feedback cycles are very long. You'll only know if you were right, wrong after a few years. So that is very different. 3, I think there are people who genuinely just enjoy building products and they get joy from people using stuff that they build. That is something you will definitely not get in VC. And there are many people who are confused. Like they like tech and products, so they think they should do VC, but they should not, because if they really like tech product, they should just build products, right? So I think that's probably the third person I would say shouldn't get into VC.
And then which kind of traits are good that you would look for to build your team, right? Can you identify there's zero background for a VC, but I'll still take a bet on that person?
I know what convinced me I should be a VC is that I felt I'm great at 2 things: sales and intellectual curiosity.
Yeah.
So VC, I feel half of it is a sales job. You're selling yourself to the founder and you're selling yourself to LPs. That's a large part of your job. So being persuasive, having the hustle to land up in front of the right people, creating opportunities where none exist, right? So pure hustle quotient, I think, needs to be extremely high. How do you get a founder to talk to you who's not raising around, right? Or how do you make a customer intro for them? So all this is basically extended sales skills. Second is, I think, to be a genuine partner to the founder, you have to have a genuine interest in what they're doing. Like the difference between a VC and a banker is, I think that's what comes in. For banking, it's mostly transactional, right? You need money, I'll get you money, I'm done, I'll move on, you'll move on. For VC, you're going to be a partner with that person for the next few years. So you really need to be curious about what they're doing. Why is it working? Why is it not working? What else has worked, right? So there are people whom we meet who I know after like let's say they work for 13-14 hours a day also, at 16th hour at night also they will be reading about this only because this is what they love, right? So I was like that, right? And that's kind of what I look for. Like, do you genuinely have a curiosity for this startup product tech world? Where because now information is free, you can find anything online. with ChatGPT, that's even more supercharged, right? So generally, we meet young people who sometimes know more than I do. In like they'll tell me an anecdote or they'll tell me about a company which I haven't heard of. So that's a great sign that this person is truly crazy about this world. So yeah, one is this intellectual curiosity. Second, I would say is sales skills is what we look for.
Rajan, what about you?
So what I would say that people who should not become VC, I would say that those who are looking for quicker ROIs. So if your time horizon is that you're looking for returns in like 3 years, 5 years, then you should be day trading, public market and things like that, right? So one of the things that people don't understand is that the VC business is an extremely long horizon. They only see the shine. I actually liken it to saying it's like a pilot's job. A pilot's job looks very, very sexy from the outside. But if you really think about a pilot's job, he's someone who's actually following checklist. And people still don't trust him. So there is a co-pilot who's actually double checking the checklist, right? And then he's just following checklist. From the outside, it looks very cool. But the training of the pilot is for that one moment where you'll have to land the plane on the Hudson River, right? Where when that opportunity comes, that's when you have to shine. So a VC is more like that, where they have to actually be very, very calm, patient, and then when a deal comes through, then they have to actually pounce on it and go for it, right? So that requires a kind of a skill where you have to be patient but also impatient at the same time at the right time. So those who are looking for quicker return, smaller time horizon, don't have patience, looking for glam, wrong place to look at. Now, what do I look for? What type of traits? But I'll also add another element, one of the person who actually mentored me about VC, he said, the best VC that he knows does not even know how to read a term sheet, right? But then he said, this is the person that, the top founders in the world will go and talk to him. So I actually look for a criteria of saying, is this guy a founder magnet? That doesn't matter whether you're 24 years old or 54 years old or 84 years old. For different reasons, people will come and talk to someone and then say, hey, I want to spend time with you. I've seen 24-year-old where founder go and talk to them because of the energy that they bring in, and then, the specific tactical help that they can give. So even if somebody is coming out of a college, but, a founder feels, a very experienced founder feels like, look, I need to spend time with him because he can give me some help. And he comes to him and talks to him. And if that happens, I know that this guy is a good guy to actually be in the VC ecosystem, because of him. And some founders will come that maybe I myself may not be able to bring together, right? The second thing that I would say is high agency, because, while this is like a patient game, but when something happens, you need to be that, lion work ethic where you lie down for a long period of time, but when you're hunting, you have to go after. So that kind of agency should be there. I would say anybody who has these two traits are a good fit for coming into the VC business.
Karthik.
Yeah, I think they've covered many of those, but let me try to kind of summarize 1 or 2 points. I think it's more introspection for myself also, and as a VC, you keep questioning many times. Am I cut out for this? Because I think Kushal said, it's a long game. You keep questioning, hey, did I do the right thing or not? So I think for me, if somebody is thinking about being in VC, I think the introspection that they need to do from a trait perspective, the way I qualify is, do you have a parental instinct? And I'll tell you what I mean by that. See, as a VC, we are enablers. We are not the ones who are actually going and doing the stuff. You're kind of sought out for when you need help, and you are expected to be on the sideline when they don't need help. So very, very important aspects from a parental instinct perspective. Are you more of that sort as a person, as an individual? Now, you got to introspect for yourself. Do you have those traits, or are you the person where you're basically more of a credit seeker? Because if you're looking at enabling a founder, making sure that the founder is actually winning that, and if you're comfortable to say, okay, I'm not looking for credit there, as long as you have succeeded, it's fine. Let me now pull back. My job is done. And in the longer term, as founders keep winning, that does come back, where that word of mouth does help you to get those deals. I think that parental instinct and empathy is very important. The second part is you got to have the ability to connect the dots in some way. And you're trying to look at how are you inferring from very limited information that you get and trying to put out a point or a thought process. Are you a person who has the perspective to say, look, this is very limited information, but I'm still going to build a point of view? So you got to be very opinionated about your thought process. And a related point to being opinionated is, are you risk taking? Because there are so many reasons why you should not be investing in something, and there are very few reasons why you should invest in something. Are you able to do that investment for that one or two reasons and back it until the right time? And at the same time, are you able to kind of just pull back and be dispassionate and say that, hey, this is not going anywhere, you got to just call the shots? I think those three in my mind are important traits, and you got to look out for, do you have those traits as an individual before you even jump into it?
Yeah, both of them said well. It's not a player role; it's a coach role. So it's not about where light can be shown on you, but it is about working with founders where the light is shown on them. Right? That's what both Karthik and Kapil said.
You all are have done fundraising and are fundraising, right? So I feel that this for VCs, and I think similarly would apply to the founders. There has never been as tough time to fundraise. Maybe your seed fund as a founder would become easy, but your Series A would be very tough. What's your take on that, Karthik?
No, definitely. I think fundraising is always extremely hard, and there's no two ways about it. Like you kind of said, if you're building a business, you need one or two believers, at max maybe 3 or 4 believers. Yeah. And as you have that, you have a runway, and you have to maybe go back to them in a year, 2 years time frame. In our business, you may have to go back to them in a 3-year time frame, but you need many, many, many more believers. And many a time, it's the external factors why they don't invest, nothing to do with you. So I think short answer, fundraising is extremely hard. So there is no two doubts about it. How do you go about it? You got to have a long-term horizon about these things. Whenever you're talking to anybody, in my own mind, I'm thinking that I'm pitching to this person not for the next fund, but for the next to next fund. And if something converts in this fund, great, because you're not selling a product. You're actually selling an idea, and you're also looking for a partner, because one of the things that you also don't want is somebody who's coming in and can be a partner in one fund. Now, obviously, all of us do need that in our early days, and it is very, very valued. But what you're also looking for is that over a period of time, can you build a set of trusted partners who can cut a check for you, not in this fund, but in the subsequent funds as well. So you need to kind of evolve to that. So I think it's just a very methodical, structured approach that you need to take. I have my notes from many, many years back as well on what I told this person, what this person told me, what their interest is, what my interest is. And it keeps evolving as well.
You are right. It's like, at least in the first or second conversation, are there any common grounds on which we can align and have more conversations?
Absolutely.
If there are not, there is no point in even engaging further.
You're looking
or
at
talking
a partner.
About money.
Correct. You're looking at a partner. Yeah. Can that person stand you, and can you stand that person over a sustained period of time? Is a very important thing. Otherwise, you don't want a large pool of capital where they're asking you, where is my NAV every month? Just like a founder also doesn't want a VC like that, right? It's the same thing that kind of carries on.
Yeah. Rajan, what's your experience?
So, as Karthik was speaking, I was thinking about what I would say. See, in this table, I'm probably the youngest from a fund perspective. We've been trying few things. It is hard. But one of the things that I would say is that, I find it very fascinating that, it is both hard and easy. When you look at it from a fundraising perspective, you'll see that there are people who raise $100-200 million. Maybe they came from a previous fund, they had track record that they were borrowing from, or they had brand. And then, emerging managers have this challenge all the time, right? So I find that very fascinating. So I don't have anything more than that to add at the point.
So I think I had a very similar journey to you, so that we started all around the same time. You launched your second fund at Neon, right? So we did $11 million first fund. Yeah. Now we're on a $30 million second fund. I liked what Karthik said a lot. I think it's definitely a lot about long-term games with long-term people. Most of the people who backed us in the first fund would have known me for 2-3 years, or who were referred by somebody who knew me for 2-3 years, right? People don't just meet you and cut you a check. I think also a large common ground was people who had invested in companies that I had invested in. Right, that also is something which helps people build confidence a lot. Like if you picked a company which won and they also had exposure there through either another fund or directly, or they know about the company, that matters a lot. And I think we've also been learning, like our first fund was mostly family offices, HNIs, and second one will also largely be that, maybe some institutions. And we also learning how to treat the two differently. We did meet some institutions in the first fund, but with the same outlook that Karthik said, right, that they're likely not come in now, but maybe at some point in the future. So keeping them warm, keeping them interested in your story, especially with people moving around, right, like that becomes very challenging. And then I think in India we also have the additional you can say curse of public markets, because you keep getting benchmarked to how well the public markets have done, and that is liquid and you can take money out anytime. I think probably in the last couple of years there has been some change, because now people have seen these companies that went public at 5, 10, 15 billion valuations. Some VC backed them at like a 5 million valuation, right? So now people know that most of the juice is gone by the time these companies come to the public market. So there is some change I'm seeing in sentiment, but otherwise that becomes your biggest sort of comparable to that you're kind of benchmarked to every time, that why should I put money in and it's not about you, that's you're kind of bearing the cross of managers who came before you and didn't perform or didn't give returns, right? So you keep getting benchmarked to past performance of other fund managers, which is like a tough thing to debate on, because you didn't run those funds, you were not there in that era. But yeah, I think the positive is the IPOs that has definitely changed the narrative on money can be made in India and big money can be made. But yeah, as an emerging manager, it's tough. I would say treat it as enterprise sales plus, right? Do it over many years, and really again love what Karthik said about meeting the person, and for the person don't even pitch the fund in the first meeting. All of that is true. I think building relationships and getting them interested in you and your idea, keeping that engagement going for many years before it converts is very tough.
I think though we are sitting at a fortunate time that India has exits, right? But similarly, the global competition among venture is huge, right? Most of, even if you see the larger funds in India, like Bloom, Stellaris, or Axels of the world, 90% of their money comes from outside India, mostly US, right? I don't know about Chirate, and in US also now they have so many options. And the other trend that I'm seeing is the larger institutions are getting more larger. Like for example, Thrive today, $3 billion fund does every stage. General Catalyst, right? So the biggers are becoming more bigger. So when you are approaching somebody for money, so I think the one point that we discussed earlier about differentiation is the only thing that can get you a check.
Yeah,
and also just one point on the family offices as well. I think they're also kind of maturing from the sense. And one trait I've at least noticed, or it's more of a learning point, is see, family offices also, in my mind, have to go through a certain learning curve. The first phase is always to say that, hey, there are two options. One, hey, I'll do it myself, because I know I've built a business. I know how to do this, and I will do this myself. Or it's the complete denial to say that, look, nothing will happen in this. I will not do anything. The next phase is where they see some successes, either because market mein success ho raha hai and then they have not participated, or they've made those investments and then there are successes happening. Then they start seeing that, hey, there are successes there. I need to be participating there. And you go through two cycles there also. You're either saying that, hey, look, I'm investing, I'm seeing successes. Now I need to scale. At that time, there is a bit of a realization that I can't scale this, and therefore I need to have a team. Then you start realizing that it's extremely hard to get that team. Is when they start saying, okay, let me put money behind people who are building this as an institution. The other extreme is that where they say that, look, I made losses. Nobody will make successes here. Until some of these big success happens, you will always be in denial. So to also kind of assess during those early conversations, where are they in their learning curve? Are they at that denial point, or are they at that point where they say, look, I know this works. I have tried my hand myself. but I think it's best done by somebody who's doing it as an institution. Only then you can actually maybe raise capital. So one of the assessments in my own mind is that where are they in that evolution journey? And I think that is clearly evolving with many family offices. And today when you get an exit, the first thing that they do is sit on it and not be in a rush to say, okay, let me just deploy, which is a good sign. And hopefully it evolves, because for many of us who are raising small funds, right, for international funds, it just doesn't make sense, because they say I need to be 10% of your fund and I need to deploy $25 million. So वो तो होगा ही नहीं if you're a sub $200 million fund. So then you'll have to keep looking for those sources who are comfortable doing those small checks.
Yeah, and another area that India gets contested on and widely discussed is why isn't India able to produce something like YC?
I can take that first, right?
Sure.
So because like I run an accelerator. See, Gary Tan actually tweeted this a few days ago. He said YC for India is YC, right? In that sense, if you actually go and look at the data, the number of seed checks that has been written by YCs is the highest, right? But then the thing about YCs is that they ask founders to sort of build for India. And we are someone who actually say that, Indian founders building for the globe. So that way, like, at 150 investments, we are probably the largest pre-seed check. And we tell the reverse when we work with founders that, from India, build for the globe. See, the whole YC thing, you have to actually put that also into perspective. YC started as startup school in 2005, right? VC business is a 15 years minimum, right? And I people that ask me about like VC business and brand, I say the most important thing in VC is brand, but it is a slow cooking brand. You cannot pour $1 billion to actually fast track that process. You have to spend that 1, 2, 3, 5 years, build that relationship. There's just absolutely no other way. Then after that, you have to actually make sure that, that brand is established. It's taken 20 years. There are some few potential, like, a friend started Morpheus. Then they gave up in year 7 and year 8, and then they changed. So you need to actually have the success, but, have to wait and then build the brand, right? So the YC brand is YC. So we are at year 6, year 7. So it will take at least another 15 years to actually build that particular brand. Sure, some successes will come, the fund will become success, but the YC brand is going to take time. The other thing that has to be sort of kept in mind is the difference between the US market and India market. See, in US market, now the timelines are different, but you can expect to go public in less than 10 years. But if you're building category creating markets, the category opens up tier 6, 7, 8. Right? So the founder that is building has to build for not a 10-year horizon, for a 20-year horizon, right? Doesn't work with a lot of the funds in their horizon cycle, and therefore they give up. Whereas, like you were actually referring to that, right? So it will take a long time to build a brand like that. At least that's my take.
Kushal?
I think it's a lot of it is being in the right place at the right time. YC started at a time when there was basically no competition. Like for someone to start doing 10-20k angel checks was crazy. Like if you read Paul Graham's early blogs, and it was basically their money. There was no fund. He and Jessica and
25k checks.
Yeah, 2 other partners. They were, which is insane in hindsight, because they kept all the upside, right? There was no carry. The whole thing is theirs. But to do it at that time was definitely visionary, right? There was no concept of an angel itself. Forget about like an institution investing at that angel stage. So they really ran with it, and for I think 10 years there was basically no competition. Then Techstars came and bunch of other accelerators have now tried. Now it's become a lot more competitive, but I feel the time for that has now gone. Like startups back then were not cool. Startups were something weirdos do, right? Like these computer science nerds who are coding and don't have a social. That was a stereotype of a startup founder. Now it has shifted to the jock who can sell, who's aggressive, who's like basically between Zuckerberg and Travis Kalanick, right? That's the change that the startup world saw in 10 years. So YC was built for that audience, and I think like there's the amount of competition there exists in the market now is too much. So I don't think you'll have something like, I think every new idea, right? Like for example, even in the tech world, you don't ask questions like who's the Google of today. Like the new Google of today is OpenAI. So the new version of what will be the next new thing will be an entirely new thing. I don't think it will be the same thing as what YC did 20 years back. So whoever wants to compete with them has to come up with a better new model which does stuff which they can't do. That's, I think, the way to approach the question rather than saying, can we recreate YC today?
Karthik?
Yeah, I think in addition to what both Kushal and Rajan said, I think it's also to do with the evolution of the market itself and the capital markets as well as the market. The problems that we were solving in India historically has been more basic. And only now we're kind of emerging away from that. And the velocity of the growth in companies is also coming in now. Public markets are opening now. And I'm kind of an optimist. I do feel that maybe a different variant of the YC model is definitely out there, and maybe you guys are already kind of building that. But it will be something which is very, very unique to India. It's the capital flow ultimately. You have more capital coming back in the hands of people because you're seeing successes, more risk-taking ability comes in, and you're also seeing that company can actually go public in a sub 10-year time frame. When at least when I entered the VC ecosystem, the standard way and answer was that if you imagine that your company will go public and therefore you are investing in early stage, people would say, what are you smoking, right? But today you can actually think that I'm an early stage VC, but I can see this company going public in the tenure of my fund. I think it's a factor of that, and I'm pretty optimistic that I think that model will also kind of show success, and some of them are probably already building that.
Yeah, I like what Kushal said, right? I think we should ask the question as like, what is the equivalent of YC, right? Rather than saying like, what is the YC, right? And he also touched upon it. I think our markets are very unique. I have this fascination for breaking down topics into small things in something that kids can understand. So I wrote a booklet called VC for Kids after reading AVC for 20 years. Right? I mean, that's where I learned a lot about VC. I shared it with a lot of Indian VCs. I learned more about VC after sharing and talking to Indian VCs than, learning across those 20 years. The reason is that I spoke to the partner at Trifecta, and he said, look, we came into VC, we thought this is going to work like how it is in the US. And then we had to practically unlearn everything, right? So the models that are built here in India are something that we learned through the hard knocks of what the Indian markets actually tells us. So therefore, we had to restructure ourselves, like how we think about exits, how we think about liquidity, how we think about horizons of the fund. So therefore, when you just take a US lens and then say, okay, does it work in India? It doesn't. And all the people that are work, whether it is founders or as emerging managers, we're all laying the foundation of the first innings, right? Or first or second innings at this point in time. So if I really loved what Kushal said, right? So we should ask the question of what is the YC equivalent based on today's market, and then how it should shape up. And that first principle thinking is needed.
I have a thought process around what does, equivalent of YC look like in India, and it requires a lot of capital. So first of all, it requires a bigger check than YC. So what I'm trying to replace is how Adit Palicha of Zepto should not apply to YC in the US, but to an Indian accelerator, right? So first is that accelerator should outcompete YC with money. First is that it gives a mil check for hypothetically at 10 mil valuation. Then you need to do, or a 500K at 5 at least, right? Then you need to do 100 those checks in a year, because for a founder in an ecosystem, it means that if I go to a VC fund, they'll do 4 checks in a year. But if I apply to YC, my chances are higher because YC accept 250 companies in a year, right? So at least it gets me started. So then you need to do 50 to 100 checks in a year. So let's say on lower case, if you're doing 500K, 50 checks in a year, you are deploying 25 million in a year, right? Or on the higher end, if you want to really outcompete YC, you're deploying 1 million, 100 checks a year, you need 100 million. So a lot of capital is required. I think once somebody starts doing that and founders like Adit come out of it, then you will attract the quality of the mentors that YC have. Then I think Dipinder Goyal of the world will start giving those founders the time right?
See, the LPs will push back and say, call it spray and pray, right? That would be the
Somebody
pushback.
It's like a very bold bet. Like
Yeah,
somebody
I
needs
agree.
to,
So I had the same idea, but I felt like 50 is too much. It dilutes your brand over time. IC does 50 across the world. 50, no, they do I think about 200
but you
in
don't
a year,
even
right?
know what
They
the
do
bottom.
200 to 500 a year, depending on which year you count.
Okay, then I was wrong. So they did 60 from India in 1 year, 2021. After that, they've fallen off. At least India, they're not doing as much.
Now they're doing 4 batches, 3 or 4.
Yeah, correct. But I feel like they've built a brand and then scaled the number of companies. If you start with a large number of companies, then you have no brand because you're backing anyone who comes to you. So you need to set a high bar and be selective, prove some success. Once you have a brand, then I think you can start scaling on number of companies. But agree on the check size for sure. I think the many attempts have been made in India, and I think that's the out of the door they get that wrong. Where if you just like the number one thing for founders, right? No matter what your brand is, how much value you are, whatever you do, the valuation matters. What price you're giving them money at, how much ownership you're taking, that is the first priority for them. Everything else comes second, third, fourth, right? So if you're just like if your deal is 3 times worse than YC, then this is not going to come to you. YC is today giving 500k on a blended valuation of I think 7 or 10 million depending on your next round. People starting accelerators here, if you're doing 1 million, 2 million entry price for 100k, 200k check, then I feel people will come to you, but they will go to YC first.
And also there is another factor in my mind at least that, see, YC, what is the value of that? What I understand is at the end of it, there are some of the credible names who are going to take those companies very seriously and double down and put more capital. That has happened over a period of time, that credibility building. And like Kushal kind of said, if you kind of put the cart before the horse, you run a big risk of being called a spray and pray, where the big boys will always say that, hey, look, okay, everywhere this XYZ is there. So I'm going to discount that and then look at it. So I think it requires a bit of maybe a different approach in India at least.
You have to show the proof that you have caught the power law before you can scale, right? Unless you show that, there is like, 1 or 2 like, Herokus, or you have shown that, you have put in a Dropbox and you've seen a few companies public, if you scale that, then you won't build the brand. So I completely agree with what he said. To the point about what YC brings, I think, see the VC, I love what Mark Anderson said, right? The job of a VC, if you do a JTBD statement for VC, the JTBD for VC is to lend his credibility till the founder finds his own credibility.
Yeah.
So which is what I think, YC does in a great way, whether it is like making customer intros, whether it is making any partner intros, whether it is working with, other investors, etc. So that is what YC does really well. The approach that we have taken is that we will do it, narrow it, and that's the area that you're working on, is and saying that, look, we'll do this on cross-border. Now that you start with a smaller segment, you establish, then you build the brand, and then you scale. So therefore, I am with both of them in terms of saying that if you scale first, then it is bold that you need, but you need to, when I was at Intuit, we used to say that first deliver awesome, then deliver awesome at scale, right? You can't scale and then deliver awesome. So that's what I would say about this.
Unless that whoever is taking that bold bet has a lot of money, then I would say invest in our funds. Don't do that.
Exactly, right?
So David versus Goliath definitely applies to startups, right? Where a startup is attacking a large incumbent, and like David, it needs a single slingshot to hit it right. Does it apply to like emerging managers versus larger funds?
I think 100%. We obviously play with a much smaller checkbook, so on check size and all we can't compete, right? So the way I could think of it is like my job is to find non-obvious funders today, or other superstars of tomorrow I have to find today. And then I have to reshuffle their networks, put them in front of the people who can change their lives, right? That's the only way I can win. So, or another way to put it is, am I fishing in the right pool? Like if a company is ready for Accel, Sequoia, Bloom today, then likely I'm already late. I should have done that deal 2 years back or 1 year back, right? So, but 100% yes, it is very much a David versus Goliath framing.
What about you, Rajan?
I have a slightly different view. To me, the whole David versus Goliath is a little bit of lazy thinking. See, as investors, we can never get caught in simple binaries. Investors, like you said initially, right, need to have like 2 contrarian thoughts, and just looking at saying this versus that is like I said, simple thinking, right? In the VC world, they say stage is the strategy. And one of the things I feel is that, practically in every stage, there are going to be winners. Now, whether it is in pre-seed, seed, series A, public market, the question really to ask is in that particular stage if you're staying. I mean, generally the consensus in the world has come today, definitely in the valley, is that everybody needs to do pre-seed. I mean, the alpha has been taken out in every other stage because, capital is abundant, a flush, etc. But I still feel that practically in every stage, the key question to be asking is in that stage, how do you capture the top 3%? So therefore, I would say that, if you consider yourself as a David versus a Goliath, then are you clear about your stage? Are you clear about your strategy? That's my take on this.
Karthik?
Yeah, I kind of subscribe to the David versus Goliath, and it's true for startups as well, right? So when you're starting something, in 99% of the cases, you're solving for an existing problem. There is a 1% where you're kind of innovating a new problem. You're actually changing consumer behavior. So as long as a thriving startup ecosystem is there is a thriving space for emerging managers, right? Even if it is stage specific, right? Assume 10 years down the line, there are brands which have been established saying this is a brand for seed and so on. Even then, there is a space for one more emerging manager. And the reason why I believe this is the same reason why startups thrive. You're always working in the blind spots of the big guy. There are certain blind spots, and there is a certain pace at which a big one works versus your pace. There is a certain focus with which you are working. There is a certain elevated risk appetite that you carry compared to a larger one. There is a reputation risk or concern that's also a hindrance to how a larger firm plays. Whereas as an emerging manager, you're basically building your reputation. So you're actually that much more risk taking. So I think that space is there. And I think like they pointed out also, I think it's very important to identify what is your call to win in that. And what is that blind spot that you will go after and try to really go deeper. I think that's most important. And like I said, I started my career at Intel, right? The mandate was very clear for that startup within there also. Unless your initiative is able to sell 1 million chips, whatever you're doing is meaningless. So there were 1 or 2 initiatives where it was phenomenal and it was a separate startup. I think it would have got funded. But here, unless you're making that big dent, it will be just a skunkworks project. So I think it's the same thing that will apply as well. So there is definitely scope.
Yeah, I also believe in David versus Goliath, especially emerging managers versus large established funds. There are a few reasons. As you observe, the fund keeps on getting larger and larger. They want to be more sure about a company, right? So that's why you see larger funds gravitating more towards the best of second-time founders, trying to give them whatever money they need at whatever valuation, right? And I think the most value, like universally, that has been created in startups has been created from non-obvious bets. Like, so you need to back Airbnb, like something like Airbnb of today, to create immense value. Like, and for that, are you the first person willing to put your credibility on the line? I think emerging managers have that kind of an advantage.
I think one big disadvantage for the larger funds also that the bigger you become, right, your fund strategy becomes a deployment problem.
Yeah.
Because if you run a $500 million fund, even if I give somebody $5 million, it's like 1% of my fund. So how many of those checks are you going to write, right? You finally have to be able to do 20-30 million checks to actually deploy or just deploy your fund, right?
Or their mandate is very high ownership. Then
or that,
a 600 million fund overall in a life of their winner would look to take 20 to 25% ownership. So I think in today's world, a large ownership also starts acting against you. But I'll take example of Zepto again, right? Zepto, the first backer was YC and the second backer was Nexus.
So first YC was not YC. There was a guy from US who put 50K in Zepto at a 1 million valuation.
Who was that?
Contrary Capital is the name of the fund.
Yeah.
So he backed them as, I think they were just students that time. Adit came to me also back then, right? He said, I'm in Stanford. If you give me money, I'll quit. I said, like, I've just not heard of pitch like show me something at least, right? And that time he was doing the Kirana card model.
Yeah.
So it's just very hard to back someone where you know that the idea they're pitching you just can't work, right? And it didn't work. He changed it to Zepto and then that worked. Adit's case is great, right? Like somebody coming and pitching you an idea which you know can't work, right? And it didn't work, right? But the founder himself just changed and did something else later. So how do you ever underwrite a pitch like that where you kind of predict this person will grow and do a different idea and that idea will work, and so I should back him today? That's what that US guy did, right? And he put 50K. So it's a pool approach. I'm sure he would have done 50, 100 checks like out of 50K
that guy would have done 100 checks
and
like
it would
that.
have worked possibly.
And there would have been maybe some sort of a connect to say that Acha, Stanford mein somebody said this is an interesting guy.
Correct.
So there has to be some factors.
There would be something which would have got him on the line, over the line with the person. Yeah.
Many of these bets are only right in retrospect, right? I mean,
that's a graveyard bias.
Yeah, in a
completely.
rare
Even for us, Jiva was like that. At first check we had done Jiva, it was a very, very embarrassingly low valuation. And now it's a 2,000 crore company, right? So everybody that time thought jewelry is not a VC business. Like, funnily, because there are multiple listed jewelry companies.
was not yet an example.
Currently, because they had not seen. But if you had seen the listed space, there were many listed jewelers back then also. But maybe it was a men's bias because most VCs are men, or I don't know what it was. But for 2-3 years, everybody would pass on the company saying this is D2C brands. People themselves, that itself became a more conventional thesis after Mama Earth. And second, within brands, jewelry, everybody was like, this is not our job. We are tech VCs, and like there are very few people looking at it, the company at all, right? So, yeah, I think the non-consensus here could be either the space or the founder. Sometimes a person whom you feel is not backable ends up building a large business. Sometimes there's a space which everybody thinks is just not a VC space, ends up like Airbnb also was like that, right? And Paul Graham's emails he had shared with other VCs, they were saying who will share their couch with a stranger and stuff like that. So yeah, it could be either the idea or the person.
So we at Neon, we are looking for founders, which again, who can sell $100,000 ACV deal to customer, but are poor to selling to VCs.
Yeah, that's a great framing.
Like VC would tell them they are not good storytellers. They'll not be able to raise money. But the same guy or girl are able to sell to customers. And I think we have been able to find like the 10th of them at Neon. Ultimately, we have seen when these companies hit 10 mil or 20 mil revenue, they would be passed by every tier 1 VC. But then your revenue speaks for itself at the scale of 10 or 20 million. We have portfolio companies like that.
We've seen the same. And in fact, I feel fundraisers are of two types. One is a story fundraise and one is a numbers fundraise. There's a type of founder who's great at talking the VC language. They know what the VC wants to hear and they'll say it bang on point, right? And they'll raise a lot of money. Sometimes these founders are able to also execute and the business numbers also catch up to the money that they've raised, but often not also, right? And other cases where the founders struggle at fundraising, but somehow, pieces together, bridge round after bridge round, and then Slice is, I think, an example that they had like a bunch of rounds, small rounds that led up to a large outcome. Even I think Misho also had a bunch of small rounds, and finally they got a elevation to come in at Series A. So there are many companies like that where the business sort of catches up to the story catches up to the business. After a point, it's just you can't ignore the numbers, and then VCs start coming into the company.
And even in categories, let's say for example, we have a company called Spot Draft in Neon. Companies are 20 mil ARR. They recently raised 54 mil Series B from Vertex Singapore. None of the Indian tier 1 VCs are on the cap table. It's not like they haven't looked at. They would have looked at multiple rounds.
Yeah.
Another company, CloudSec, at 10 million revenue. They recently raised 20 mil at like a 100 mil plus valuation from a strategic in the US. None of the tier 1 VCs from India. They looked at it multiple rounds, stating sometimes market is small, the founder is... But I think the founders surprise.
For us, the best, this non-obvious versus obvious example in our current portfolio is Numi. When they started, there was this company, Virgio, which raised a ton of money because the founder was CEO of Myntra. They raised, I think, 30 million pre-launch, pre-product based on the guy's profile and the idea. Numi basically got passed by everybody for about a year.
Axel finally invested.
Axel finally came in by the Series A. So, but they raised from us, then they raised from some funds I had never heard of. Some US based funds came in. Then Fireside came in, then Accel came in. But there was a 18-month period where he was just non-stop struggling to convince anyone to invest. So eventually the numbers caught up to the story.
I want to do a rapid fire before we proceed next, and you would think of the answer within first 2 seconds, right? So one company that you wish you have invested in, Karthik, let's start.
Swiggy, I saw and dropped.
You saw it. Oh, what about you, Rajan?
Postman, I saw it very early when they were in India. The founders were increasing.
I already said mine, Zepto.
You saw Adit, right?
Yeah, he came, pitched me. In fact, I had an intern who joined me. That day was his first day. First call was Adit's pitch call. So whenever I catch up with that guy, he'll always remind me, Adit had pitched us and you didn't invest. Yeah, man, thanks.
Yeah, no, Swiggy was an interesting story. He's my batch.
Okay.
So when he came back from London, so connected, and then we actually sat and we had lunch, and he also said, help me with the business plan and all. Worked on that and then took it back to my team, and I was still kind of early then. And everyone said, food tech kya hoga? I said, okay, let me not waste my time here.
Yeah. I think some of the legendary stories are like in Flipkart also the founders were like not
Yeah,
VC favorites,
Everyone had seen that.
right? Everyone in the market had seen that. It was like Abhishek from Traxon, and he was an associate in Axel. Then that took a standing that I'm going to put my money in it. If Axel, finally Axel, he convinced Axel over a period of 6 months.
Wow.
Right? Because he was willing to put his saving of 10-20 lakhs in Flipkart. So the one investor from India and one globally that you admire the most.
Investor from India, Accel. Investor from Global Benchmark.
And individual partners?
Don't have an individual partner favorite as such, but I guess the way they've built as an institution and not made it a person centric.
Sure.
I think that's what I admire the most.
What about
For
you?
me, from India, he's not in India anymore. Ashish Gupta, Elian, one of the smartest man I've ever seen on earth. The second is the global one. I'd actually pick between Elad Gill and Gokul Rajaram. Gokul Rajaram would not look like a typical investor, but if you look at the top unicorns, I think from an investor perspective, he's in top 5 in terms of picking unicorns.
I think India, I really like Elevation. I think Mukul's track record even there is exceptionally good. I think he's on the board of some 7 or 10 unicorns. First Cry, Swiggy, Unacademy, and there's the whole list of them. And globally, I'll probably still say YC. I've just seen nobody. What I love about it is I think everybody else, how much of an institution you build, if the people change, the funds ranking changes. Like Kleiner Perkins used to be one of the top funds, they then went down, right? That cycle keeps repeating in the valley as well. YC is the one where I feel the founders have comfortably retired and the brand still continues to kill it. That's the one exception in the world where I feel the brand has gone way beyond the person.
So I think in India, I would rate funds that are accessible. So I would rate Karthik Reddy from Bloom and Alok from Stellaris. Right? They're yet to be Shekhar Kiranis of the world, but I think they have all the traits right now to be that in the next 10 years. And globally, my favorite is Peter Thiel, just because how non-contrarian he has been throughout his career on everything, not just investing, on politics and everything. Yeah. What one thing you would like to change about Indian VC ecosystem?
There's so many things to change, but I think just taking high conviction bets.
Yeah, right.
I would actually say I don't want to change anything. I mean, it may sound a little odd. Yeah, I from a VC perspective, very new. But I already shared about this experience that I had where I spoke to a lot more VC. I thought I had learned about VC from Fred Wilson. And then, when I created that book and then I shared it with so many folks and I learned, and then I understand that, no one is doing wrong. So you have to first understand the game before you change the game. I would still say I'm very, very young student. Can't think of anything to change, because whatever is happening in India, because it's come through School of Hard Knocks.
I would say 2 things. One is most VCs in India still don't honestly close the loop with the founder. There's still a lot of ghosting and just Like somebody comes and pours their life's dream out to you and you just don't reply after that. That's just bad. And second, I think is the paperwork also in India is insane. US solved it many years back, and like here we take anywhere from 2 to 6 months to just close the deal, and most VCs don't think of it as their job. They just hand it off to the legal saying this guy will do it, and the founder struggles with that for the next 4 to 6 months. Those are two things I would love to change.
Founder that you would want to invest in but not work for? That's a hard question.
That's a very hard question. I don't know much of those.
Yeah.
Requires a lot of thought.
I can start with Bhavish.
I was about to come to that only because I had evaluated. I have a very interesting experience of our first meeting back then. We were evaluating taxi for sure, and based on that, we felt that we should be putting money in Ola. And that was a very interesting conversation that we had when we went and said we want to evaluate. And then, so I think Bhavish would be the one.
Yeah. Yeah, Rajan.
Since you and I know Vijay, I will say, Vijay is someone that I'd like to invest in, but not like, sort of work for, is because he's like such a driven guy, and you can see that, he'll carry the team with a certain velocity and things like that, right? So practically anybody that I would invest in, I would not want to work for them.
Yeah, same thought. I was thinking of Dipinder always, like great. I mean, if you bought the stock early on, good for you, right? But I can't imagine working for the guy. It'd probably be 18-hour days every day for 20, 25, 20 days, 30 days a month.
Yeah. In my case, it's reverse, right? Though I'm invested in Atomic Work and Vijay, right? I would love to have worked for him. And this is the reason I'm an investor, because I thought I can never be co-founder to a person like Vijay, because his bar is, his co-founders are Freshworks co-founder. So being an investor is the only way that I can get to partner with him.
That's a good way to think about it. But you should try, you should explore that with Vijay.
I'll ask you for an internship for a few months. Right. What you have unlearned as an investor, especially after starting your own fund?
Unlearned as an investor. So many things that I'm unlearning along the way. I think this whole bias of big brands and big people know a lot is something that I've kind of unlearned. There's a lot of high conviction that you can have independently.
Not say as an investor, a broader person, but it'll apply as an investor. I learned that power laws matter, right? Everywhere. I mean, there are a lot of areas in life where power laws apply. So if you're someone who's like working on an equity-based business model, like power laws matter.
Kushal?
Yeah, I think similar to what Karthik said, I think tier A brands, they are often wrong. Like it takes time to accept that you can, maybe you're right and maybe someone else, and vice versa also, right? So you need a lot of humility in this business. But yeah, often one big unlearning for me was, as an outsider, I should think all these big brands, or whether they're big founders or they're big VCs, they often make mistakes. So they are on aggregate, they've done really well, but individual decisions you have to question every time. Are they seeing things the right way or not?
One memorable lesson as a founder has taught you?
I think it's humility only. In my very early days, I think the approach was always about more preachy. And this founder actually, point blank in one meeting, after the meeting, he came and told me, hey, look, you were not adding any value in that discussion, and you better think what you're doing. I think that was a great learning for me, to make sure that you're kind of, if you're talking, then better add value, otherwise keep quiet.
So this happened in a discussion, but then it came out of because the founder repeated it in that discussion, stuck with me. He said, he used this quote. He said, I may be wrong, but I'm never confused. Right. So that particular line actually stuck in my head, because that's like a great quality for founders to have, that every day they have to be 100% sure. They may be questioning themselves. There are many ways to sort of state this: strong opinion, weakly held, intellectual certainty, emotional uncertainty, all of that. But the way the founder said that, today I'm very clear that this is what I'm doing, and I might be wrong, but I'm not confused. Because if you express that confusion, the team members get confused, your investors get confused, the broader public get confused. So you can actually be completely opposite to what you believed yesterday. But at that particular day, you have to be 100% sure, more than 100% sure. So that one thing, stuck in my mind from that founder for a very long period of time.
Kushal?
I think it's for me, it was probably Vidit that once told, like before they went up competing against Flipkart and Amazon, he had told me, I'm going to do it. And I was just like, this guy is crazy, man. Like, because at that time, Amazon, Flipkart were like these giants, right? Like, you couldn't imagine that they are followable, right? But Bisho went after them and they won. So, ambition, I think, is one thing I learned from that chat, that to do those things, you have to first dream of those things. Most people don't dream only about, that big. That itself is, I think, like the big gating criteria.
Yeah. So it's a self-realization which, Vijay told me once, that said being nice is your strength as an investor as well as your weakness. So accept that.
Good one.
Yeah. No, thank you so much, Karthik. I would love to have like 75% of my notes are still left. Would have to have another conversation. Thank you, Rajan. Thank you, Kushal.
Thank you.
Super fun.
Thank you very much.
Learned a lot.
Likewise.